Sure. No, it's a good question. We get asked that regularly. There are a host of stocks in that category, and I mentioned there's a few that we're building positions in at the moment. I think SG Fleet's a great example of a stock that we own, that we bought and we've owned for some period of time. Eclipse in the same sort of field, a fleet management business. Both those stories and both those stocks are very well managed, have great business models. We think they're on the right trajectory, and you could see, we think, meaningful appreciation in their market valuations going forwards. But I mentioned Versons a minute ago. I mean, that's a stock we've been on not from IPO, but from shortly thereafter. That's another business that they've got some execution issues ahead. They need to make sure they bed down their recent acquisition. But that's another example of a business that, if they do execute and do perform in accordance with what we're expecting, that sort of stock is absolutely on its way to the big end of town. It is worth noting that at the moment, and you don't often see it, the P multiple for the ASX 100 is about 15 times. The small ordinaries is about the same, maybe 15.2 times. Don't often see that. The catch cry for investors is your small caps should be trading at a discount given all the inherent uncertainties. I agree with that. And the problem with being a professional manager when you've got a 20% discount, small caps versus big caps, the problem with that is they say they want to, but nobody really wants to own a small cap. They don't. Much as they admire the discount, they actually don't want to own a small cap under a discount scenario. They start to buy small caps when the discount disappears, and we get a parity situation where the 100 and the small odds are about the same, which is what we've got now. That is when interest returns to small companies. And in fact, interest gets really hot in small companies when the small cap trades at a premium to the big caps. We're in a situation now, which we are rarely in, where they're actually at parity. It should therefore come as no surprise, given that theory, that the performance of the small ordinaries versus the ASX 100 on a monthly, quarterly, calendar year to date, and financial year to date is overwhelmingly in favour of small caps. Small caps are outperforming big caps. And so on the back of that, my suggestion is that that is quite a bullish setting for small caps. The fact that there's a lot of IPO activity and new capital being raised and new deals coming to market, that also underscores the fact there's too much supply around. You should read it the other way, that there's enormous demand around for these sorts of transactions. So, well managed, good, solid small caps, whether it's ARB Corp, whether it's Bursons, I mentioned Eclipse, and each of these names are stocks we have in the portfolio, by the way. Those sorts of names, those sorts of stocks that we are comfortable with, and if investors do their own homework and their own research, they'll perhaps become comfortable with them too. They're the sorts of stocks and the sorts of names you can own, we think, in the next 12 to 18 months.